Okay, so just a quick disclaimer before we get started. I am not a CTA, which stands for Commodities Trading Advisor, meaning I can teach you the strategies, I can help you learn to analyze the charts, I can point out setups that I personally want to buy and sell, but the actual trading decision is going to be 100% up to you. Okay, so we got a buy signal on the dollar Canadian 1 hour chart that's been called on the IM Mastery Academy Harmonic scanner. We've got an entry range between $1.3893 and $1.3813. These are the two green lines here, and we've got a take profit one at $1.40. So let's switch it over to the Smart Trader chart and get things marked up so we can see exactly how we're going to enter this trade. This is a pretty good setup. We've got a take profit one from first entry is about 123 pips, about 222 pips to take profit two. So definitely see how we can get involved with this trade. All right, so now we're over here on Smart Trader. The first thing we like to do is we're going to make sure that we get our trend line to the downside. And we first work it out on the 1 hour, and then we're going to drop it down to the 15-minute to look for that entry. And then what we're going to do now is we want to put our fibs, our smart fibs, bring it up here to the top. We're going to drop it down, and we can see now exactly why the harmonic scanner, which uses the Fibonacci sequence, right? We know that all harmonic patterns are derived from the Fibonacci sequence, different combinations, right? Different ratios. So we can see why exactly the harmonic scanner is signaling a buy, because we have to remember that the harmonic scanner constantly scans the market 24 hours a day for us to look for those high probability reversal setups. So you can see here that we've got our A, we've got our B, C, and then here's our D extension. So we know the correlations, right? Here's our zones, right? We've got the 23.6, the 38.2, the 50, and the 61.8. So we know that anytime we get a pullback, right, or a retracement within the AB boundary, and it hits one of these key levels, right? We like to call those the trampolines, that we know that it's all about momentum. So if we get price to reverse in one of these zones, then we're going to expect a 1.618D extension. If we got a deeper retracement, say to a 78.6, then we're going to expect a 127. And if we get a deep retracement, 86% of the move gets taken back by the bulls in this case, then we're going to look for a 118D extension. But in this situation, you can see here, again, we got our A, our B, our C, right, which is our deepest retracement within the AB boundary before the reversal occurs. And because we got it around a 50%, we're projecting a D extension. So this is exactly why you get in the signal call that there's a potential reversal setup, right, on the dollar Canadian. So for example, once this ABCD completion finishes out, so let's see here, we got our A, our B, our C, and then down here it's going to be our D extension. And of course, just because it hits that extension doesn't mean that the trade is finished running to the downside. We have to wait for a new swing low to occur to consider that to be a definite low for that particular price at that point. So here, so we've got our A, B, C, D, okay? And what's going to happen is once it hits this D extension and it forms a swing low, then you're going to have a situation now where you get a new Fibonacci that forms. So our C is going to become our new A. Our D, wherever that takes place, is going to be our new B, and then we're going to be looking for that C. And that's actually, and then if this trend continues, then we're going to be, here's our new D, like that, okay? So once a pattern, an ABCD wave, right, the market moves in waves, we have to agree on that before we can really go further with anything. We have to agree that the market moves in waves. So you got an A, B, a C, and a D. And when that finishes out, now your C becomes your new A, your D becomes your new B, and then we're going to trade that retracement. That's what the scanner does a real good job at, is finding that reversal zone, right? Okay, so what will happen is that once that decompletion hits, then you'll get a new fib. Wherever that low occurs, that's going to be your B boundary. So say it occurs there. And then what we're going to look to do is take that trade to the upside. That's what the harmonic scanner does an amazing job using the algorithm. It does an amazing job finding those reversal setups for us. So just a little lesson there, but okay, back to the trade. So now that we know where our D extension is, we want to plot out those entry points that it gave us. So the first entry was at 138.93. So we're going to put that at 138.93. So 138.93. 893. So that was our first entry, which is our minimum entry, and then our maximum entry is at 138.13. So 138.13. So 138.13. 13. Okay. So just right here, we can see how accurate the harmonic scanner is, because here's our D extension right here. So it's saying, hey, within this range, we're expecting some type of reversal. We're looking for those buyers to maybe come back in the market to push price up. Plus, I mean, if you're just going off of structure, right, that D extension aligns right with structure here, right? There we go. There's a past support level there. So what we're going to do, because we're ultimately going to take this down to the 15-minute time frame, is we're going to take this dotted line, we're going to turn it red, and that's going to represent our D extension, just like that, right? And then we want to make sure that we protect our downside, right? We want to make sure that we put our stop loss in at 137.56. You're going to see how this all plays out, right? The Fibonacci sequence is real, it works, okay? The market moves in waves, so 137.56. So 137.56. I mean, you're combining harmonics, Fibonacci, and Elliott wave all in one tool, really. Okay. Here we go. So this is the setup. So we got an A, B, C, D wave. We got an exhaustion point right here at our D extension. When the D extension gets hit, once a low is formed, right? That's our swing low. And if you don't know what a swing low is, maybe we'll cover that in another video. But once that is hit, we're looking for price to reverse. So now we see exactly why it's calling us. Now we're going to look at our first TP level, which is at 140.20. So we can mark 140.20. And we'll change that to blue. And I do this for every single setup that I'm looking to take. So 140.20, it's about repetition, it's about consistency, right? So your strategy and your plan has to be consistent for you to make consistent profits. Okay. 140.20, and we'll take the next take profit at 141.14. So 141.14. 141.14. So every time, repetition is the mother of all skill. So we're gonna put our first two take profits in. Okay. So we don't see it yet because that D extension hasn't been hit quite yet. But what we're going to do is now what I'm going to do is I'm going to transpose all of this down to the lower time frame, to the 15-minute, and show you exactly how we play these setups. So we're going to trace this over just so we know. Now you don't have to. This is just something I like to do because we already have the D extension from this fib marked. But ultimately, like we said, a new fib is going to form. So I always like to write a note to myself when I see these type of setups is we're going to wait for the new fib to form, okay? Because we're looking for that price to reverse. And so that keeps us patient, because a lot of times when people use the harmonic scanner, they jump right in because it's in an entry zone. And that's not really a good idea, even though it is highly accurate. If you were to do something like that, then you really need to use, definitely, well, you always need to use proper risk management, but I definitely would cut my, if I was planning to trade at $1, I might cut it to 50 cent or 30 cent, depending on the size of your account. If you have a smaller account, if I'm just going to take every trade that comes through the scanner. But I definitely highly recommend that you be patient and you wait and you learn the entry strategy. So I'm going to link all of these to the lower time frame. And we're going to go to the 15-minute chart now, and you'll see what we have. So let me get this out of here like that. And here is our setup. So this is where we are currently on the 15-minute time frame. So here is our trend line, and what we could do now that we're on the 15-minute trend line, 15-minute time frame, what we could do now is we can see that we have an inner trend line that we can draw like this. So you've got an inner trend line, and there you go. We've got another inner trend line there. Okay. So here's our setup. This is what we're looking at. All right, here's our 1 hour markup transposed down to the 15-minute. Okay, so here we go. There are our take profit levels here. And what we're going to do is we're going to wait. All right, we're going to wait for this D extension to get hit. And once that D extension gets hit, we're going to look for price to reverse out. And I'll draw it up for you, right? So we can kind of predict what will happen if the perfect trade works out. Okay, so what we're looking for now is for this D extension to be hit and exhaust. A new fib is going to form up there on the 1 hour. But all we're looking to do here is we're looking for this trade to do this. And we look for the same thing every single time. And that's the consistency that the harmonic scanner brings. So we're looking for this trade to do this. Looking for it to come down, okay? And then we're looking for it to break a trend line. And when it breaks this trend line, okay, we're looking for a pullback, like so. Okay, we're gonna look for a pullback. All right. Now, of course, this is a hypothetical. We're predicting the future, but this is the move that we trade. Okay, and this is the move that happens often with the harmonic scanner. So there's our pullback, right? And then we use the Fibonacci sequence like so. There. Once the inner trend line is broken and we form a high on the backside of this trend line, then we're looking for price to pull back to retest an area of support that's in confluence with one of our Fibonacci levels, like so. For an example, it's at the 50%, okay? This is where we're looking to enter a trade. So then we're not using that original stop. We're gonna come 10 to 15 pips or so below our A boundary, which this is our A boundary. See, look, let's label it out. Let's label it out. Look. A, B, C, D. So we're looking to take the C to D move. So in this example, that trade from the 50% to our D extension will be 108 pips, and you're trading this off the 15-minute. So we like to put our stop below the A. So this is our A boundary. So now we don't have that big, huge wide stop way down here. We're moving it here, right below the A boundary, right below, in this example, right below this 138.46. Okay. Now we have everything we need, because now we say, in this example, let's put, this is where the harmonic scanner is drawn to take profit. But for this example, here's our D extension. So we would put our take profit here. And now, just like that, everything is set up for us. We can draw our risk to reward. So if we enter here around the 50, here's our stop. This red line is our stop loss. Okay. And now we have our risk to reward worked out. So now, here we go. Here's our TP up around this area here. Okay, like this. Out. So now I am risking, if I enter here, I'm risking 52 pips, right, to make 103 pips. So we're looking at a 2-to-1 risk to reward in this hypothetical example. But this is the setup that we look for. So you can see, so what was this, 100? So we mark this up like so. That's 102 pips, say, okay. So we're looking at plus 102. So if any of you have watched my videos or you see my markups that I post on Facebook, you now see exactly what I'm doing. So here, so we're looking at like 52 pips, okay? So minus 52 pips, just like that. And this is how we use the harmonic scanner to set us up with those high probability reversals to get us great risk to reward ratios in the Forex market. And we get these scans all day, every day. These are high quality setups. And we really, really like the harmonic scanner. It is a consistent system. So this is an example of how we would set up the UCAT if it all plays out right. With that being said, that is it for me. Just always remember that our mission is simple. We empower through education in order to enrich the lives of other people. That's the mission. So until the next time, I hope you guys gain some valuable nuggets from this, and make sure you definitely comment, like, and share. I really appreciate the feedback. So until the next time, God bless.